Hello everyone, my name is Viren. On the behalf of Group 7, today I am going to present about the change management plan of company Encana Corp. So, Encana Corp is well-known name largest energy and natural gas producer in Canada. The organization dates to 1800 when the Canadian Pacific Railway Ltd accidentally discovered natural gas while drilling a water well for the workers. The company was eventually spun out of Canadian Pacific and took the name Encana in 2002. The company has had a hold over natural resources as well as had merges with PetroChina, a Chinese oil and gas company. This collaboration was set for 49.9% stake in Alberta. Prior to this collaboration, Encana and PetroChina in 2011 tried to set up a, a 5.4 billion Canadian dollars joint venture on British Columbia gas assets, but a deal fell through over reported disagreement about asset value and development pace. With the time, Encana has spent a couple of years attracting partners seeking assets and merging with the partners for attractive business deals. In addition to their work in natural gas, they had also drilled wells on their 4.5 billion acre of land in Dun- Dunaville. These are the group number 7 members. These are the table of contents you can see. Encana to Omnitive. Encana Corporation is well-known name, largest energy and natural gas producer in Canada. The organization dates to 1800 when the Canadian Pacific Railway Ltd. The company was rebranded as Omnitive. The company announced the name change in 2019 and 20, further releasing a statement that the new name stands for their commitment to deliver unmatched through continuous innovation. However, the main motive of any business is profit, and cannot observe that they were not quite in the boat yet. Identifies the change. In year 2018, the company began its change management plan to rebrand themselves. Here's here's the words from the CEO. The signal that he has sent on the importance of oil and gas has been abysmal, and it's very difficult for investors who want to have confidence in Canada. One of Canada's largest energy companies is relocating its headquarters to the States, and Canada is changing its name to incorporated and moving its corporate headquarters from Calgary. What's motivating the change? For a call back to Calgary with more high. So, they have decided to move their headquarters from Alberta to Canada. Alberta, Canada to Denver, USA. In addition, decided to change their name from Encana to Omnitive. Vision of change. The vision of the organization was to pull in the more investment from different mergers which they saw lagging. They wanted to rebrand themselves to showcase new values that the company believed in. So they were also facing delay in pipeline construction due to policies in Canada. Their vision was to open up a pool of investors which will help the company to grow and take on the projects with no limitation. This change would also affect change in organization structure, work policies, ongoing projects, future projects, and how company wants to evolve itself.
The next is change management agents. The board director of Encana board unanimously recommends that Encana security holders vote for the a reorganized resolution. The board of directors, the Encana board believes that the opportunity to enhance long-term value for the shareholders will be greater as a U.S. company than as a Canadian company, and the believed As a USA company, they may to be able to attract deeper and growing pools of passive investment capital in the US. The next is the Encana board believes the recognition will help capture the value we deeply believe exists within our company. The other side is financial and legal advisor. Citi acted as a financial advisor to Encana. And next is Blake Castle Graydon. Uh, Graydon LLP acted as a Canadian corporate counsel. Paul Weiss, Griffin Wetton Ganning LLP acted as US corporate counsel. Willie Fine LLP acted as Canadian tax counsel and Osler. Hosling and Harcourt LLP acted as a US tax counsel. Thank you.
Hello everyone, my name is Arvinder Singh and I'm gonna talk about the topic resistance and risks. Effectiveness in the new market. To set a base in a new market, complying with the new market trends, refurnishing policies, Encana seeks to mitigate the market risks associated with the future cash flows by entering into various risk management contracts related to produce natural gas, liquids and power. Change in organizational structure. Changing the organizational structure by accumulating new positions and reorganizing current employee structure for the benefit of base country projects as well as new projects in the United States. Criticism on social responsibility. While the business was targeted towards the profit plan, every business has a social responsibility towards its people. But moving the base from Alberta to Denver came across disheartenment by the people of Alberta. A risk of moving from short-term to long-term projects. The majority of Encana's production was sold under short-term contracts at the relevant market price at that time. Uh, the product is sold now will be moving in long-term projects. Implementation strategy. The following statement has been said by CEO and President of Encana, Doug Suttles. We are doing what it takes to get Encana back to winning, and we have already begun executing on our strategy, with some of that impact being seen in our strong third quarter results. He also added that his team has a focused long-term plan in place, the resource base to support that plan, and a talented team of people with the energy and drive to succeed. Below is a timeline graph showing how the company brought change with different steps, taking one at a time.
Hello everybody, my name is Kulwinder Singh and I will talk about the cost of change that was 625 million. In the starting year, the company understood the loss of change in the sales and the COGS, but slowly the company increased his sale and ultimately get the profit. And finally, in the third year, the company estimated their project increase in the new market by increased sale. You can see from the table the if we talk about the sale summary, in the first year the total sale was 2,07,000, and in the third year the sale was 7,70,000 dollars. If I talk about the total costs in the the cost of goods sold in the first year, that was 1,000 no sorry 1,50,000, and in the third year it was 5,03,000. If so the net profit in the first year was $3,57,000, and in the third year it was 12,73,000. And the bar graph also show the annual income and the gross profit. As we can see, the total sale in the first year was little bit low from the second year, but with the passage of time, the sale increased and the total costs as well as the net profit also increased. Thank you.
Hi everyone, my name is Sarpreet Singh, and in this slide we are going to learn about the feedback and evaluation business ratio. In this, we will learn financial ratio for year 1, year 2 or year 3, and liquid ratio from year 1, year 2 and year 3. We can see the success rate ratio, like
it increased year by year, and from the first year there is a very difference in year 3. It increased by the time, and profit margin is also increased by the time. Like in first year it was 12.07%, and in third year it's 17.66%. So you can see the numbers overall. This is the next slide, and in this slide we will see the required funding. And for the other investment there is 55,000, that is 21% from the total. And for the bank there is 50,000, that is 20%. And the biggest amount, that is for debit investor, that is 100,000, that is 39% from the total. And for the owner equality there is a 50,000, that is also 20% from the total amount.
Myself Kajol Saini. Now I'm going to talk about use of funds with different type of fixed startup expenses. First of all is the initial lease payment, it's 3%. Second is lease deposit, 1%. Third one is furniture, fixtures and equipments, that is 24%. Improvements, 20%. Professional business insurance, 2%. Miscellaneous cost $8%, employee change $2%, working capital 28%, marketing 4%, and land assets 55%. So in this graph there is shown that the major portion of the fixed expense startup is by the land assets, that is 55%, and the minimum part is by the lease deposits, that is 1% only. So next. So these are the references website from which we have got our content.